you a small business owner who's eager to grow your business but feels trapped in the daily grind of day-to-day operations? Do you find yourself struggling to find time to focus on growth, unsure of which steps to take to actually achieve real progress? If so, you're not alone. Many small business owners face these same challenges when it comes to growing their businesses. But the good news is this: there are proven strategies, proven frameworks to help you break free and soar to new heights. And that is exactly what we're here to do today. Welcome to the HaltingWinter Podcast, a podcast designed specifically for small business owners like you who are looking for expert advice, proven frameworks, and actionable strategies to grow your business and take it to the next level. I'm your host, Seth Winterhalter. Today, we continue a 12-part series giving you 12 specific steps to take to grow your business and double your revenue. If you've yet to launch your business, these are the steps to take to start a healthy and thriving business. Today's episode dives into the topic of cash flow. How do we manage our cash? How do we make sure we don't go to jail because Uncle Sam did his wily, tricky things and we didn't pay the right things? How do we make sure that we have the cash to get through lean seasons? All of these topics we want to dive into and really boil it down into just some simple strategies on how to manage cash once it starts flowing in. This is where a lot of small business owners get into trouble by mixing their business and their personal accounts, their business and personal expenses, and it causes massive headaches, not only for yourself, but for your accountant. If you're not going to do things yourself, which you probably shouldn't, if you need an accountant, if you need a bookkeeper, these people are not, some of them, I've been talking to bookkeepers lately who won't even take clients because their books are such a mess. So we want to help you get straightened out and give you simple tips so you can have a simple system to keep you stress-free and out of jail. Before we dive into our topic, let me encourage you to check out our brand new program designed specifically for small business owners. It is called Small Business Flight School. This is a 6-month program designed to tune up the 6 major parts of your business by installing proven frameworks that have helped hundreds of small businesses double their revenue and soar to new heights of success and impact. You can learn more at smallbizflightschool.com. Smallbiz, B-I-Z, flightschool.com. Again, 4 words, Smallbiz Flight School. You can find the link in our show notes. Let's dive into the 8th step to take if you want to grow your business and increase your cash flow. We're going to start with the framework for cash flow that Donald Miller talks about in his new book, How to Grow Your Small Business. In fact, it's right behind me. Check that book out if you haven't got it yet. Buy the hard copy, buy the audio version. You can even, again, I go through all these frameworks on these podcasts. That's what we're talking about. But in his Business Made Simple framework, cash flow management is this. He says you need 5 separate bank accounts. And I would say you need 3 of them for sure, but 5 if you want an actual growing business. 3 for sure. You got to start with these 3, but I would recommend set up all 5. Just go into your bank and set up 5 bank accounts, and you're going to be in a lot better shape. Now, let me tell you what those are and how they operate. Number 1 is your general operating account. This is the primary account. All of the money that comes into your business comes into this account, and all of the money will go out of this account into various things. You're going to pay bills out of this account, right? You're going to pay yourself out of this account. You're going to pay your employees. You're going to do all of everything happens in the general operating account. You want to have 1 to 3 months of monthly expenses in this account. Right? This is where you want to make sure that this account is healthy because this is the main account. Now, I think Don just did a podcast on this recently, and I think he said, if I recall correctly, he said to have 1 month of expenses in this account. I would recommend 3, and that's not just because I want you to have extra cash in there. I think a lot of small business owners have a lot of seasonality to their business, and when you have seasonality, you need a little more than 1 month, because the issue is you can think of a good month. Even if you average out your months, with only 1 month in there, all it takes is you to get into a lean month, a planned lean month, and then for some reason, something happens. For some reason, right, you use Facebook as the primary place for your advertisements, and they change the algorithm, and it messes up your ad flow. And all of a sudden, now you've got to restart, and now you're a month behind. And now that account is getting crazy lean. That's where I think I would just say, unless you're very steady Eddie in your small business, I would encourage you to probably have a little over 1 month. Maybe it doesn't need to be 3, but 1.5 at least. I think that's a better place to be, just to give you peace of mind. Right? Here's the thing: cash flow should give us peace of mind. We want to be aggressive when it comes to investing, but we want to be aggressive into growth, not to living so lean that we're being risky, causing stress in our lives. So just be careful there. So general operating account is the primary account. Everything goes in and out of this. So if it's not going out to pay a bill that's a part of business expenses, not your bills, not your personal bills, right? Not your home, I'm talking about work expenses, actual work write-offs. That's general operating. The second account, the two actually accounts that are next, because you want them both, they're both going to get the exact same thing. You have an owner's account and you have the tax account. An owner's account and a tax account. The owner's account is, right, this is what you get to draw from. This is your personal money. Once the bills are paid out of the general operating account, you can put money into the owner's account and take, right, your dividend. Now, anything you take out of the general operating account needs to have whatever you take out. So if you take $1,000 out of that account to put into your owner's account, you're going to take the exact same amount out and put that into the tax account. This is going to keep you out of jail. Every time money goes out of the general operating account, an equal amount goes in. So if you want to take $5,000 out and put that into your owner's account, you have to take $5,000 out and put it to taxes. And so if you say, but I don't have $5,000, great. Then guess what? You take $5,000 out and you get $2,500 in the owner's account, and you put $2,500 in the tax account. It has to be equal. Now you may say, well, I'm in this state and that seems real high. Great. Have extra in there because it's still yours. You're not giving it to Uncle Sam and then hoping he gives it back to you. It's still your account, but make sure that your because here's the thing, especially if you're growing, that tax rates and tax, numbers, like you just don't want to be in a pickle where all of a sudden you've got to pay more than what you planned on. You don't want that. That causes massive stress. You don't want the IRS breathing down your neck. You want to make sure that the IRS stays far away from you and they're satisfied with what they're getting, and you are able to do your thing without that stress. So anytime money comes out of general operating, that is matched into the tax account. Okay, I hope that makes sense. Now, here are the other two accounts. Now, again, these first three is a very basic approach. And this is where, I'm not going to get into this. I'll have sometime, I'm working with a couple tax people right now who I'm kind of vetting because, I always want to vet people to make sure they're good people and have really good sound advice. But I've got a couple that I'm talking with who I really like, really enjoy, built a good relationship with. I want to have them on to give some insights into things like an LLC and your S corp, your C, your different corps, your different, why would you do that? The idea of being able to have an S corp and, the owner has a salary and then you're taking dividends off that and the tax benefits of that. There's all these things that, we could get into. I don't know how many of you have that interest, but those are good things, right? Because you don't want to be paying the IRS more than it needs. My always thing is this: whenever I talk to a tax person, I'm like, my philosophy is this: I want to keep as much as possible without going to jail, right? That's my philosophy. Uncle Sam has plenty of money. He doesn't need more. He can take more from Amazon and Walmart if he wants more. He has plenty from small businesses. And so I'm going to give him as little as possible. But I have no problem paying taxes, but I'm not going to, but I want to give him as little as possible without going to jail. I don't want to go to jail. I want to be stupid. So that's my philosophy. So help me out there, right? Give me, and I don't go chasing write-offs either. I'm very, I don't agree with everything Dave Ramsey says, but I listened to a podcast the other day he was on, And he talked to, and someone was asking him about write-offs, trying to work the system to get the write-offs. And it's like, that's just stupid. You're just throwing money away for a write-off. And I know, because I have some people in my family who everything is about write-offs. And I'm like, you are just chasing your tail with this foolishness. Like, pay taxes, but don't go buying stupid stuff, wasting your money so you can get a tax write-off. That is just foolish. I'm not saying there's not a place for being wise and strategical with the things that are going to help grow your business, but don't go buying stuff you don't really need just to get a tax write-off. Foolishness. Wasting money, throwing money away. Stop it. It's okay. It's okay to pay taxes. In fact, if I can pay more taxes because I am growing, right? Awesome. That's a sign of growth to pay more taxes, but I'm still only going to give you what you actually need. I want wise people in my corner giving me sound tax advice. So again, back to this. General operating, owner's account, tax account. General operating is clean then. You're seeing the actual expenses of the business. You're seeing the actual income and outflow of where the money is going for the business. Without this, if you have one account and you're doing in one credit card and you're doing it's personal, it's business, and no one knows what's going on, that is not healthy. That is not going to help you. You are going to get in massive trouble, and you're going to have stress upon stress trying to organize that and fit that. Don't do that. Have a general operating account that's just business. Have an owner's account that's where money's going in, and then you get to do whatever you want with that. That's your money, but you've also put that equal share into the tax account so you can do whatever you want and not go to jail. The other two accounts are a business profit account. This is where, you don't need to put all the cash into the owner's account. You want to live well, but you also want the business to profit and the business to grow. And part of that is putting then money into a business profit account for growth and expansion. This is where you're going to put money so that, if you bring on a new hire, you feel good about hiring them and not having to fire them because, right, they didn't crush it the first month out. You have some profit in here to buy equipment, for hires, these kind of things. The fifth account is an investment account. Once you have, 3-6 months of business profit in that account, then you want to put money into an investment account to actually see money grow, to actually be earning money instead of just getting small dividends from the bank. You want to actually be investing into things, whether that's stocks or real estate or things or creating actual wealth. And so you have a general operating account, you have the owner's account, a tax account. Everyone has to start there. Everyone should start there. Then as the business grows, you have a business profit account so that you're actually seeing, that's going to help you actually grow. You're going to be able to strategically grow because of the money in there. And then you have an investment account where once that business profit account has, 6 months, 1 year maybe of expenses inside of it, then you're investing into things or creating wealth for your company outside of the company. So, if you're, a lot of people, this is the field that are like, money, I don't know, I don't understand. If you need help, let's sit down. We want to help you get clear on this area. We want to help connect you to the right people. I have bookkeepers and accountants and people that I built relationship with that I trust that I would love to recommend to you. But first, we just got to get solid. Keep things simple on your side because you still need to be in charge. You still need to own the back end of your business. And that means you need to own the cash flow management system. So if we can help you do that, then give us a call. Let's set up some time. In fact, this is one of the key steps we take in our flight school program, helping you tune up your business to fly higher, farther, and faster. We don't want to just talk about growth. We just want to think about it. We want to take actionable steps to grow our businesses, to double our revenue, and to see more impact. Learn more and apply today at smallbizflightschool.com. That's 4 words, small biz, B-I-Z, flight school, smallbizflightschool.com. Go to the show notes. The link is there. Let's take action. Go to your bank and set up 3 primary accounts today. General ops, your owner account, and your tax account. Do those 3 and take some stress off of you. The next step is have 1 credit card for business and 1 for personal. Again, maybe you're not a credit card person. I don't know how you survive today. I don't think, I don't think a lot of the softwares we use for our business, I don't think they're taking wampum through the mail. So you probably need a credit card, but stop using just a personal with mixed expenses on there. Have one credit card for business, have one for personal. Do not mix the two. Keep things straight. Your bookkeeper is going to love you because of that. They don't want to wade through, especially today with businesses with weird names. You don't want to cause them. You're just spending way more money than you need to, giving your bookkeeper stress and a headache to try to figure out what's what. So fix that, clean that up, clean up things, and that's going to help relieve stress off you and relieve stress off your team. Tune in next time as we dig deeper into cash flow and we talk about the importance of a clear and concise budget. Now that we have our accounts lined up, how do we actually have a budget that helps us? So tune in next time and let's keep growing, let's keep soaring, let's keep getting after it. Until then.